What's up, folks? Honey's Morning Update, September 14th, day after CPI craziness. So yesterday had a 237 point range in ES down to 39, 38. 40 was the number I was looking at after 80 and then after 27 up here. So we fell down. This 27 level actually held. It held at 28, 27 for a bit before dying. So that level is going to be still there. It's going to be something to watch. So that 27, 28, 30 level is going to be something I would keep an eye on for upside resistance today. The other big level is going to be the 39.80, which coincides with our overnight high. So we really need above that. If we can open up above that, I think we can start to see higher. The first target, again, would be 40, 27, 28. Your mid yesterday, and typically I don't look at mids or put value to them, but since we had such a large range, and it would be mid on two different ranges, would be that 56, 58 level. So that would be something I would watch as well. And then you're going to get to the 95, 96 level up here. I don't see us getting up here, but that 37.40 is going to be a huge level. So we'll see. Again, a lot of singles cleaning up. Eventually, this stuff will be cleaned up to 41.75. So write that down. Now on the low side, this 40 level, 32 to 36 level is going to be. We need that to hold. The 67 level was actually pretty big as well. We're kind of right there now, but I was saying 40, but it's really the 36, 38 kind of level here. We'll see if that holds. Then your other monster is going to be at 39.08. Below that, we get into the 39 or 38.80s. And I would expect the 38.80s to be defended. I don't know if downside's done, but it seems to probably be that way. So 39.80, and then your next walloping one would be 38.40. And then basically 3,800. So 80.40, 3,800 are my big downside targets, but I would expect this 36, 38 to be defended today if we get down there. Maybe we have a consolidation day. I don't know. PPI comes out today, so we'll see if that has any influence. Hourly, your pivots are going to be wonky today just because we had such a huge range. So you're looking at 80 points between resistance and pivot. So 40.22 is your pivot, 41.07 and 38.70. Daily, so here's that trend line I've been watching. You have your 200-day at 42.66. We're still in line, still in downward trend. I did put this little triangle here, this little wedge, just because it kind of seemed appropriate. So we'll see if this has any juncture, if we consolidate here for a monster move somewhere else. But as of now, this is, we moved. We're kind of consolidating. So I mean, technically, this we're could come back into the 50 and 100-day range, moving average range. Quarterly, so we've got 2 weeks and this bar closes out. So this is not exactly bear or bullish for this quarterly chart. So we'll see how this all works out in the next 2 weeks. A lot can happen, a lot of info coming out. So I wouldn't get married to anything yet. We could see a reversal. We could see a bounce back. Here's our monster 41.40 to 40.37 gap. That is a monster gap. I don't see that filled in one upside target, but the 40.37, again, what we've seen is this will come and hit that and come back down. So look at that for a resistance as well on SPX. And you still have these two lingering guys, but I wouldn't worry about those little guys today. Anyway, we'll see what the reaction is if we continue lower or if we bounce back and and consolidate a bit. This trend line for the euro, look at that. I mean, boom, boom, boom. We hit that yesterday, popped again, and then now we're down. Now it's up pretty good today at 400 ticks. So we'll see if this continues or if this comes back down. But that 39.95 level is going to be pretty significant. Then we get back into the lows again. So keep watching for that euro weakness. Euro weakness equals dollar strength. Japan's currency is getting destroyed as well, so everything's really propping up the dollar. So we'll see if we get into more of a deflationary aspect come fourth quarter with a stronger dollar, and then really into next year. But we'll see. Again, this is nothing's really pretty right now, but so please stay vigilant. Today is PPI, so we'll see what that number comes out at. And then Thursday, jobless claims haven't really been that big of a deal. We haven't seen any shocks. So since we haven't, that means that that's just kind of a looming. At some point, we're going to get a weird print on this. It's going to affect us. I don't know if I see it, tomorrow, Thursday, but we'll see. But there's a lot of manufacturing and stuff coming out on Thursday. Then you have UMich Friday, and then next week nothing gets better. Monday, Tuesday is going to be okay, but Wednesday's your Federal Reserve. Existing home sales is going to be important, and then Jay Powell talks. So we're not out of this yet. In fact, this market structure is probably here to stay with these swings. So we just need to get used to finding those levels and taking those quick profits and getting out. Anyway, I will be in and out all day. I've got work to do, so but I will do my best to stay in, and please stay safe.